Hello everybody, Alex here. Welcome to my finance and accounting education channel. Today we are starting a new series which might spread over the next 15 years, and you will see why. Of course I cannot promise anything, but this is my intent. I am aware that such a format is also present already on YouTube, or probably also on other possible channels. But however, I'm still going to do it because mine will have let's say it's particular aspects, and it will somehow differentiate from at least one that I know. And I'm doing it also because it's helping me stay focused on the objective. But before we jump right in, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. I do them quite regularly these days. You should expect new and hopefully interesting videos from me on Tuesdays, Thursdays and Sundays as well. This is the prologue. I have named it exactly like this, the prologue. It's in a funny way named Who Wants to Be a Millionaire? It's one of the well-known TV shows and games, let's say, but we are not going to do anything in this direction, so there will be no questions with 4 variants and so on. You can call a friend, and if you know the TV show format, which is quite popular in many countries around the world, I'm saying that basically everybody or most of the people want to be millionaires, and the idea is that this show will somehow let's say be my companionship and will help me focus on my objective, the objective being of being a millionaire. And of course I have a plan for this, but before we start with the plan, let's say you just see a few things that have led me to this idea. So first there is this common saying, so a Chinese proverb from Lao Tzu, which says that a journey of 1,000 miles begins with a single step. Now, if you follow this channel, you know that I'm not a big fan of the Chinese companies, Chinese economy, Chinese stocks, mostly because of the Chinese Communistic Party. But I like this saying because it's simple, and it's let's say it's the epitome of all the motivational stuff that we hear and read and so on and so forth these days, that at some point we get fed up with this idea that is quite simple and yet effective, that if you have an objective, if you don't start working towards that objective, the chances are that you will never reach it. And then we have something from Adam Smith. Surprisingly enough, this is known since 1776, Wealth of Nations. Of course, it's about nations, but it's also applying to individuals. He was more towards production-oriented goods and services, but it's also about investment. But the principle which prompts to save is the desire of bettering our condition, a desire which, though generally calm and dispassionate, comes with us from the womb and never leaves us till we go into the grave. So, the desire to better our condition. This is the purpose of saving and investing, building up capital. So let's just say that this saying, and for the people that might not get the essence of all the other things that Adam Smith is writing in his book, building up capital is an essential condition for economic progress. By saving some of what we produce instead of immediately consuming it, we can invest. I didn't took the full quotation mainly because from Adam Smith, mainly because he's going into the production and so on and so forth, which doesn't really concern us as individuals. And then there is a very funny dialogue between Jeff Bezos and Warren Buffett, as reported by Warren Buffett. By Jeff Bezos, I asked Warren Buffett, your investment thesis is so simple, you're the second richest guy in the world, and it is so simple. Why doesn't everyone just copy you? And Warren Buffett answers, because nobody wants to get rich slow. So my plan is to get rich very slow, because I think this is the only way you can achieve it, with being persistent and having a plan and knowing what you're doing, and trying as much as possible to give up to your plan. Of course, there will be we need to be realistic. There might be bumps in the road, but still the plan is I plan to stick to what I want to do. So the game plan is starting with a euro 100,000 portfolio. The idea is that if you don't have it already, you need to add 3 to 4 years more. You will see exactly why. Let's just see that was the original thesis, and we will see that the numbers are not exactly like this, and I will explain you why later. The goal is to achieve $1 million euros in 2021 prices. It's in euros because I live in Europe, that's why. So in 2021 prices. How to do it? I will need 15 years of saving and investing, of smartly saving, 25,000 per year with at least 7.5% return above inflation rate. Above inflation rate in order to stick to 2021 prices. Yeah, that would be the idea. Just as I have said, discipline is key. Some years might be worse, some might be better. For example, I got on my actively managed portfolio a 34% return in 2021, but 2022 might be far from these good results. And the idea will be that I will do these episodes, which will be probably a month, so I will not do weekly or more times a week, but once per month an episode in which I will present you the development of the portfolio, what kind of investments were done. Some of them are automatical, some of them will be my decision making directly, how much and when and so on and so forth, and in what I will invest as asset classes, per asset. Yeah, so this will be the idea, to present you the development. Then we have the math behind. So we are talking about, as you can see here on top, about 15 years from 2022 to 2036. I am 41 years old, and the plan is by 55 to be done with this. Of course, it is possible that I reach this before, but I wouldn't count that much on it because there are many variables, and although okay, maybe sticking to the savings and investments amount per year, it might be easier. The returns in the market might be higher or lower, but I count on several years of above average gains. We start with, just as I have said, with 100,000. We have 25,000 per year, which means that nominally I will have to save and invest 375,000 euros in 15 years. The required return rate is 7.52. Okay, I said 7.5, but 7.52 on an average per year. This is the value of the money in 2036, so after 15 years. And you see now, you can see through simple financial mathematics, the value of the compound interest. Let's say it's not actually compound interest because I'm not going to have bank deposits. Of course, it's absolutely impossible to reach 7.52 with bank deposits, but let's just say that the initial 100,000 and the 25,000 investments from 2022 will be worth 371,000 from that million in 2036. So you see how important is the capital which I have at the beginning. Then the money from 2023, so the other 25,000 will be worth 69,000, and so on and so forth. And the value is dropping, okay, because the later I invest, the less returns I will get probably for that money. Ending up with the 25,000 from 2036, which will be a little bit shy from 27,000 worth, so not that much. Of course, there is here a discussion that this 25,000 will not be invested at the beginning of January, so 1st of January, in order to say that exactly 7.52. So I actually have to do more because the investments will be gradual. And yeah, so they will probably also not be at the end of the year, but yeah, it's a discussion, but those are like, let's say, details, very refined details. Then we have the future value of yearly investments. So how much are the let's say the 25,000 in the first year, so excluding the 100,000, yeah, so 26,880 and so on and so forth till they are worth 74,000. Now the idea would be that after the first year, so at the end of 2022, I have 134,000 euros and so on and so forth. You can see the numbers, and they add up to the 1 million. And since we said that we want to have that in the prices of 2021, I took an average inflation of 2% per year. This will have to be updated with every year, so I hardly doubt it that will be exactly 2% and in each and every year. And these are the cumulated values, and all in all it adds up to the fact that with 2% per year I will actually have to have 1,346,000 euros by the end of 2036 in order to maintain the same purchasing power of 1 million euros in the prices of 2021. So I think this is quite simple, clear to understand. Our goal is this, corrected for inflation, which will be this. As I have said, there will be some bump in the roads. I expect that in some years I will be below these values, in some I will be above them. If I manage to reach my target before, I will be very, very happy. It's possible that I don't reach the target as well, but even if I don't reach it, probably I will stick a few more years to doing this and so on and so forth. So there is the plan is clear, there is a flexibility, but as much as possible I would like to avoid altering the factors or the conditions that I can directly influence. I said 100,000 because that was in the initial assumption, but I'm already altering the deal, so we are not starting with 100,000, we are starting with 85,000. This was in the values of end of 2021. As you might already know, in 2022 the market took some beating, which affected most of my assets, most, not all of them. And also I decided to take some things out, some things which I will detail later, but are normally considered as being part of a net wealth of an individual. Just as a short reminder, the net wealth will be the difference between all the assets that you hold, so basically everything you have minus all the debts, all the credits, all the outstanding that you have. So it's like an active minus passive in the balance sheet, and those components are also part of net wealth, but for specific reasons which I will detail just in a few minutes, I will not take them into consideration. So we start with the life insurance unit link that I have valued today 25,740. The idea is that it's like an investment plan, so it fits the definition. Most of it's quite aggressive, most of the theoretically risky, but the risk is reduced through diversification. Most of the funds are invested in shares anyway and in other investment funds. Then we have this life insurance with cash value. This is not a typical investment product. I have presented both of these products, unit linked and cash value, on my channel already. The story with the life insurance with cash value is that I'm not getting that much return on it. I'm just putting money in it. Basically, by the end of it, the cash value, the return that I will get at the end, will be depreciated more or less exactly with the inflation rate over 20 years, because the purpose of this was risk protection primarily and less investment. The other one is more of an investment oriented product. And why is it here? Simple, because this will expire in 2027, which it's exactly in 5 years, will expire, will reach its maturity. And the final payment from this one will be reinvested in the asset classes in 4 years. So I thought it's safe to do it and fair to do it like this, so whatever I'm taking now into consideration plus this 25,000 euros per year will stay here, and I intend not to somehow balance from the other ones which are outside of the scope. Then I have an investment plan, which is also an automatically amount which is being paid monthly, 1,143 euros, and then I have my actively managed portfolio, 48,000 current value after the beating that we took in January and February and March. I don't know, let's see by the end of March how we end up. Seems that market has recovered in the past week. Formed out of Google, Amazon, Apple, Facebook, Microsoft, so the five giant companies. Then I have the semiconductors sector in the portfolio, with ASML taking a large and lofty piece of the cake. Just to be honest, I hope that ASML will be for me in the next years what Apple was for Berkshire Hathaway. So for Warren Buffett, I see a great potential. It's a monopoly. It's top of the line in an industry which will have a lot of demand. So I see only good things happening here. And then we have the free rates around town, Derwent and Gecina. For the moment they are from Germany, United Kingdom, France. I intend to add 3 more for diversification. Also one from Germany, one from France, and one from UK. The game of investing, whenever I will invest in this asset class, will be primarily that I will look at what I have. If it happens, though I hope not, and with time passing it will be harder and harder, that one asset is below the initial investment, so I'm in the red, I will add to that asset. If not, I will add a new asset. And if I have no ideas about what new asset to add, I will look at which one has better perspectives, and no matter the price, I mean, yeah, of course, if I consider that it will be overpriced at that point, I will probably not do it, but the criteria with dollar cost averaging, so with reducing the base cost, will not come at hand, but I will still add to that company. Yeah. Now, what I left outside, of course, are the pensions. I do not manage them. They are also automatic, and I will not have access most likely to all of them, from what I know, till I'm 65 years old. So it's outside of the interval which we have fixed, which is till I'm 55 years old. So I will cash in another 10 years afterwards. So there is little to no chance that any money from this pension second and third pillar in various countries that I have lived, and my native country and so on and so forth, will transfer some money from these ones to the other ones. I have left outside some building society, which also it's not nearly as significant as amount either way, and also there will be no transfer probably, and some provisions, and yeah, so those will remain not relevant. Unfortunately, when I've started with this 100,000 here, I have included everything, and it was in the values of let's say of 2021, December 2021. But this is just making the things more interesting, because now I have to reach 134,000 on 137 corrected with the inflation rate, with less of a starting base, which is, as I have said, more interesting. I might not reach it, but probably I will reach it in the next years. That would be it for today. This is just the prologue. I will intend to do these monthly updates in which I will present you the developments, basically what I have acquired, how is the portfolio looking, what growth or hopefully not that much reduction I have in the portfolio, excluding the new acquisitions, and so on and so forth. Thank you for watching me today. If you like this video, hit the like button, of course. Comment in the comment sections below if you have something to add to the topic. Share it with somebody that might be interested, somebody who's interested also in getting rich. if nobody's interested in getting rich, then probably this video is not that interesting for you. Also, do not forget to subscribe to my channel and to hit the bell notification button. You will never miss an update on my site. I do them quite regularly these days on Tuesdays, Thursdays and Sundays. You should expect new and hopefully interesting videos from me. Below this video, so additional ways through which you can support me. You have links. You can create an eToro account and trade their CFDs, which are basically mirror images for shares and cryptocurrency and so on and so forth. But you can do that without a commission or a fee, which is always a saving no matter how often you are doing it, be it once per month or once per year. It's always a saving. And also below that link you have an Amazon wish list with hardware and software items which can help me improve the quality of my videos, and you will also get better videos from me if you decide to help me through this way. But let's just be honest and say that this is the most inconvenient for you from a financial point of view. The easiest way through which you can support me is to subscribe to my channel and to continue to watch my videos, which I hope are interesting for you. Once again, thank you for your time and patience today. My name is Alex Petrescu. This is my finance and accounting education channel, and I look forward to presenting to you with the next opportunity. Goodbye.